Today I'm going to be trying something a little different stylistically while I share what I'm calling my master analysis. If you look at page 232 in the Elliott Wave Principle by Frost and Precher, you're going to notice figure A13, and they had a forecast for cycle wave 5 to terminate near the 4,000 area. We did have a high in 2021 towards 4,800, and I'm also calling this cycle wave 5, notated here in yellow. You're also going to notice that I have above that a supercycle wave 3. And that would suppose this current downtrend is supercycle wave 4. Supercycle wave 5 is gonna be a lot of fun, and I think if you are a short squeeze chaser, that's probably where you're gonna get that squeeze. It's not gonna be though until the markets bottom, not until the shorts are done taking profits or are about to start taking profits. It just depends on your point of view. I don't chase short squeezes. Here we go. So what am I looking at? I believe we had a fractaling of a zigzag, a double or triple zigzag, and that ended near 38.93 at about May of 2022. From there, we saw an expanded flat, which threw the price up to 431, 430-ish on SPY. That's about 4,300 on SPX. And at that point, I called for a reversal, and the price did reverse and fell pretty hard. However, I don't think that this is the end of the move downward, and I say that because if we take the amplitude of the first wave coming down for wave A, we're looking for an equal move for wave C. And the most recent low in 2022, near 3,600, did not achieve that, which tells me that there's still one more impulse wave heading lower. Interesting, isn't it? So how could that possibly be the case that we still have a ways to go when we're in such a bullish uptrend? Well, I believe that we're in a symmetrical triangle that's extending wave B of this larger zigzag pattern. And what we're currently observing is an overthrow of the last touch point of the triangle, which is E. What follows would be a push down to complete this overall bearish market for a zigzag, a flat, and then an extension of a triangle, one more impulse wave down, and then we'll see a reversal. Then we'll see a bottom, but we're not there yet. I'm gonna open up my SPY chart, and I've got a lot going on here, so I'm gonna zoom in and try to break this down. The zigzag ends, the first zigzag ends around 390. It's not the overall low. It's very tempting to want to make this whole move down, take the extreme and say, hey, that's the end of the first half. But really what I'm thinking is that zigzag ends early, and then this flat sets a new low and a new high, which is very annoying. An irregular flat, just, geez, making everyone crazy. And then this triangle forms, which is an extension, the most annoying chart pattern ever. And what we have now is a throw over. What will follow, I believe, is a drop. Yes, we broke the downtrend from 2021. But we still haven't made a significant high that breaks bearish wave counts, not until we get above 429. That August 22nd high on 2022 was a very big deal. If the price can get over this level, it's off to the races, the bulls have it, and we're going to enter into an explosive rally. I don't think that's the case though. Zooming into the hourly and going to move my chart drawings over here. I think it's possible that we were actually in an ending diagonal triangle or a rising wedge for quite a while. So I've reanalyzed this a little bit. There's a little bit of price overlap between what would be waves 1 and 4 of that triangle, and I have that shown in this purple box here. As price rises, it overthrows the top of that triangle, touches 418, that critical level of bullish reversal, rejects, and sets a clean retracement lower for A, B, and C, coming down to 404. Then bouncing again, creating a double 3, and then we've had a rejection from a lower high, testing the last previous low. The price being closer to this low than the last high is a big deal. It means that the bears have a technical advantage in setting the price lower, and if they can get the price below 402, then I'm calling bearish reversal. Until we move between or above 418 or below 402, the ball can really go to anyone, and I don't really want to say we're going up or down, but my bias is of course always down. I'd be expecting a small pull up to about 408 before seeing the price reverse and sent lower to test 402. Next week is going to be a very important week. I want to say too that my observation has been there is a catalyst event halfway through a bear market, and it being that we're ending this extension for wave B, looking for wave C of that ABC correction at the supercycle level, that we're likely to get some sort of news event in the near future. I don't want to talk about it, I just want to say that's all there is. This has been my master analysis. It's very bearish, and I'm going to sign off.